Well, I think obviously, what do they say? That history never repeats, but it often rhymes, right? And I think you find that in so many different parts of the market, right? So whereas the economic backdrop is different with this stock market crash, the investors are the same. The investors right now are the same as I saw when I was starting investing in 1999. Right, we get excited about this new trend, this new theme in the markets. We bid up those kinds of stocks, like the pandemic stocks that we saw, and then when the future doesn't look quite as bright as it did for those stocks, then we panic and we sell out of them. And I think it's one of the best opportunities right now in those growth stocks that we've seen crash so hard, 70-80% over the last year, is that yeah, now they're still growth companies. Companies like Teladoc, companies like SoFi Technologies, even PayPal, which is quite a bit older than a lot of those other companies. They are still growth companies, changing the world in which we live. But now their valuations are so much more attractive. Back a year ago or 2 years ago, the valuations on these things that investors were paying, per share, per earnings, per sales, were just ridiculous. You could not justify those kinds of stock prices. And but now that the stocks have come down, then they are still growing companies, but they are also value stocks as well.